Welcome to the Nightly 5 podcast with Ben O'Shea.
At GYG, clean is the new healthy. But what does clean mean to us? No added preservatives, no artificial flavors, no added colors, and of course, no unacceptable additives in our food. That's why our guests feel so great after eating GYG.
Who doesn't love a cheeky burrito? Well, popular quick-service Mexican restaurant chain Guzman y Gomez are hoping investors will also love their IPO when it hits the Australian Stock Exchange in June. Here to add some guac on this story for an extra $2 is business reporter Adrian Lowe. Okay, Adrian, give us a rundown of the Guzman y Gomez story up to this point.
Hola, Ben. Muchas gracias for having me. GYG, founded 2005 in Sydney by a former New York hedge fund manager by the name of Stephen Marks, who said when he spoke to me a couple of years ago, he got to Australia, started eating what passed for Mexican food here and hated it and thought if they're going to get the real thing, it's going to blow their mind. So essentially, they've grown now to 210 restaurants in 4 countries, and that's in the space of about, 19 years. So they're basically pinning themselves as the healthy fast food option. They say they compete with the likes of Macca's, the likes of KFC, Hungry Jack's, all those fast food places. They don't see themselves as a sort of a high-end restaurant. They are fast food. They're not ashamed of that, but they think fast food can be done really differently.
And you can get beers in a Guzman y Gomez
you
restaurant,
can.
right?
That is also very helpful.
Can't get beers in a Zambrero.
The other thing they sort of pin on is that you can't make it cheaper at home. So we all do Mexican at home, right? But they reckon their price point is what gets people in the door, that you won't get the same quality or for a cheaper price than you will at home.
Yeah, absolutely. With Cozzy lives at the moment. Are you kidding? You try and do your humble minced tacos at home, and you basically might as well go to Guzman y Gomez. And so why, after all of that, are they launching on the ASX now?
Well, essentially the same reason that most companies will launch onto the ASX, which is a capital raise, get some more money, but it's to fund their aggressive growth plans. So essentially they're going to be looking at around about trying to raise several $100 million to go. They want to sort of get to potentially at 40 or 50 stores a year.
Wow.
Additionally, on top of what they already have. So that 210 is split up. Most of it's in Australia, but there are a couple. There's 4 in the US now, and they've also got a couple in Singapore and Japan as well.
Yeah, wow. And, fun fact, I've actually been to the Guzman y Gomez in Tokyo, in Harajuku, and they had a margarita special as I just happened to walk past. I was in no way interested in having Guzman y Gomez, and it was like half-price margaritas. They were like $3, and they were the strongest margaritas I've ever had. Don't remember much about what else happened that day. And now let's talk numbers. So market capitalisation, share price, how many shares? Give us the nuts and bolts of this.
Yeah, so they're essentially looking at a share price of $22, which is sizable. By way of comparison, Collins Foods, which is a franchisee or franchisor, I should say, of Taco Bell, KFC across the country, not all of them, but some of them. They've got a market cap of about $1.1 billion and a share price of $9.15. Domino's, which is a big rival here, about $3.5 billion as a market cap, and their share price is about $38. So they're sort of in the middle there. Remembering, of course, that the size of a company is by its market capitalisation and value, not by the share price. So, for example, at $22, they'll be on paper bigger than Coles, but the market cap is quite different there. They're looking at a market capitalisation of about $2.2 billion.
Ooh.
So what is interesting is that there's no public offering to this IPO. Yeah. They're allowing institutional investors and brokers to buy in, as well as some franchisees and staff if they're eligible. So all going well, and that is an unknown in an IPO process, but all going well, we should see GYG shares trading sort of towards the end of next month.
And is the idea behind not offering it to the general public to try and shield the company from a bit of that market volatility that could come?
I'm not sure. That hasn't been quite spelled out in this IPO document so far. I think what it is sort of they're saying they've got demand from their institutional backers, and they're sort of quite confident, I guess, around what their company, their franchisors, their staff know what they do. I think it's obviously up to them the way they want to fund it, and it's not it's not like a Qantas or a Telstra where the government's floating it, and there is clearly hot public demand to get in there.
Yeah.
Retail shareholders also aren't a huge amount. We generally, the Joe averages, like us, Ben, will have shares through our super funds as well, and they are institutional investors that can get involved. So Aware Super is particularly involved as one of the bigger groups here in GYG's case.
Oh, you never know, Adrian. I might get all my mates on Reddit to band together To the moon. And so what's the longer-term outlook, do you think, after this IPO?
So they're saying their forecast for the calendar year 2024 is that they'll have nearly 25 billion in total sales. So that's growth that's pretty strong. They reckon about 6% growth to 2028. They're saying, they are definitely able to compete with the likes of Macca's, Subway, KFC, and the other ones that are growing like Grilled. As I said, the growth is really around Australia, growing that market offering. They've got, they reckon they can have more than 1,000 restaurants over the next 20 years. It is quite interesting that they've got such a long trajectory already. So that would be taking us to, nearly 2050
wow.
in 20 years. What I would say also is it's interesting, Guy Russo, who's the former boss of McDonald's in Australia and also the guy who turned around Kmart, is the chair of this company, of GYG. So they've got someone who knows the QSR market really well, someone who knows the retail market really well and is able to turn things around. So it's quite interesting to see the sort of heft that they've got behind the company. They've been going quite well for 19 years. Being on the stock market is quite different to being privately held. And it is the biggest IPO of the calendar year so far if it's successful. So the market's been crying out for more launches. It puts them to about 185 in the ASX 200 if it goes off this way. So it'll be really interesting to see whether they can hack it or whether it'll be hasta la vista in a couple of years' time.
Well, business reporter Adrian Lowe, thank you for always being the wedge of lime in our corona here on the Nightly Five. We'll speak to you again soon.
Absolutely. Thanks. Adios.